Welcome to a new video on my channel. Today, I have an extremely brilliant trading strategy to share with you. It's been a while since I shared a strategy on this channel, but lately I have been doing a lot of scalping, and I'm sharing a strategy with you today that really works well. I will demonstrate it using the PEPE Coin on a 3-minute chart. However, this scalping strategy can also be applied to a 1-minute or 5-minute chart. Currently, I am only using the 1-minute and 3-minute charts because with the PEPE Coin's high volatility, we can sometimes make profits of 15% to 20% without activating any leverage. Due to the small time frames, we can also limit our losses by following the rules that I will explain to you shortly. Before we get started and I dive into the chart, I would really appreciate it if you subscribe to the channel if you haven't already, left a comment and a like to boost the algorithm for my videos. I will be sharing more strategies like this in the future. Now let's move on to the chart. We are currently looking at the 3-minute chart of the PEPE Coin on Bitget. By the way, for those who are not yet on Bitget, I have a link in the video description where you can get 10% cashback on your trading fees. This is particularly advantageous for scalping, where you can make 20, 30, or 40 trades per day, as you will receive 10% of the fees back into your account for each trade opening and closing, depending on which coin you trade. Let's now move on to how we proceed. We are in the PEPE 3-minute chart. Why? In this case, the 3-minute chart has proven to be the best for me with this strategy. However, you can also use the 1-minute or 5-minute chart, but I wouldn't go much higher because PEPE is very volatile, which is advantageous for scalping. The problem with trading in higher time frames is that by the time our close signal comes, we could have experienced more losses. This is kept to a minimum in the small time frames of 1 to 5 minutes. Which indicators do we need now to start? The very first thing we need are the NSDT Hamut candles from Northstar Day Trading. We add these to the chart. You may already know them from another video. After that, we need the OCC, which stands for Open Close Cross Alerts No Repaint. If you can't find them with OCC, please enter Open Close Cross Alerts at the top, and they will come up. You take the version with no repaint from Justin Uncle and add it as well. It all looks a bit confusing now. Of course, it's also very volatile, but we use the OCC alerts to enter long and short positions when we have confirmation up here. We need to adjust some things for that. That means the very first thing we do is go in here and set the multiplier to 2, and here at the MA type, we take the SMMA. It still looks volatile down here. We still have some long and short positions that are not valid. But how do we get rid of them? In this regard, we turn on the Hyxzqqkfaf candles. I'm not usually a fan of Hyxzqqkfaf candles, but in this case, it has an advantage in the small timer from 1 to 3 or 5 minutes that there is not much price difference and we get much cleaner signals here. And how do we proceed now? So, I don't think I need to say as a very first step, if we are green here and have a bullish trend, we only take bullish signals or alerts from down here. But if we are red down here, then they are only bearish signals that we take with us. But we also have to pay attention not to take every signal because there are some rules to follow. What you can do now is go in and say, I don't want to give the max gradient steps 20, but 5. That means you don't have such long transitions with the candles, but they are really only displayed faster when you are bullish or bearish. And I would recommend this for the beginning. You can, of course, change it. You can see it quite well here, for example. If I set this to 20, the candles here are much longer yellow or orange. That means we actually want faster confirmation because we are in the small chart. That means we will also be shown much faster when we can go long or short. How do we proceed? If we now get a sell signal down here, I'll show you how to set the alert shortly. Then we have to look up here to see if we are already in the bearish phase with the chart and whether our candles are already red or orange in this case. But we get an optimal, really an optimal confirmation when these Hamut candles come under these MA lines. Because then they will also turn red again, and that would be confirmation for us. That means we wouldn't go in right away when this alarm signal comes. It looks good here now, so we would have had a perfect entry here. But the problem is, you won't have that everywhere, and therefore we are prepared for sideways phases with many consolidations before minus trades. That means, in this case, we would get or confirm our short signal here because we have this transition. That means, at around this point, we would say we go short. Then we stay in at least as long as rule number 1 until the chart in this case goes back above our hammer candles. That would be option 1, or if a buy signal comes earlier down here. But one must not become too greedy. You can see here, we still could have taken 4% profit. Just as a small example, I'm going back here. Where were we? So that we can also see where we really entered. That means the candle where I connected was perfect. And also the candle where we exited, that was in this case here, it would have been 3%. There's not much difference in the right chart. But if we say, hey, we don't want to be greedy, and I go back to the hyxzqqkfaf candles. Since we are scalping, we have so many opportunities here to get new trades due to the small chart. If we don't want to be greedy, that means at 2 to 3%, we should maybe take out 50, 60% and set the stop loss at break even. Or if we see, hey, we have a reversal. Anyone who knows hyxzqqkfaf candles knows that when these wicks here become smaller and move in the other direction, then you should already consider closing, or you know there is a trend reversal. Then you could have already taken 6% without leverage. The same thing maybe briefly as a bullish signal. Here, for example, is an incredibly perfect signal, which of course was made to enter here. And here there wasn't even any counter signal to make us say we have to exit. That means we're also looking here again. This signal came down here, a bullish signal. Don't worry, we'll also look at signals that are incorrect. That means we were bullish here. I'm zooming in on the chart again so you can see it better. That means we were bullish here. We had confirmation with a green candle. We were also above the hammer candle. We would have actually entered here because the alert signal only comes when it has been confirmed. And then you can see that we were constantly green. We had a candle here that was pointing downwards, but we never closed below the hammer candles, which was a great advantage in this case. One could have considered exiting, but we were still in the green. So, no, there was no reason to exit. Let's take a look now at how much percentage this trade would have brought. We would have essentially exited here because the candle would have closed downwards. One could have taken a bit more profit if done so. But it wouldn't have been that much more if one had decided to risk it and wait until it turns red. Instead of 19%, it would have been 18%. But 18% in a scalping trade is incredible. And we are talking about, let me check quickly, how many candles were there? These were 4 hours and 51 minutes. So that was actually nothing. It's incredible what we actually gained, which was 18%. And if we take a look at the actual chart, if we see it this way, this would have been the entry point. And the exit point would have been a bit lower, and that's it. That means we would still have had 17% without leverage. So, incredible performance. Now I want to show you a quick example of a signal that is not quite correct. That means if we really go in the opposite direction, that was really difficult to find. I had to search for it a bit, but in that case, we would have had a valid signal here. Let me zoom in a bit more. Because we have this red candle here that also closed below the hammer candles. And we got an alert here, which tells us, hey, you can go short. But when do we exit? Our stop loss is every time the candle closes above the hammer candles. In this case, I will show you briefly when I hide the chart, the candle closed above the hammer candle. And that is our stop loss. Please do not risk it and wait, maybe it will go back. No, that is the stop loss and one must exit there. You have losing trades and you have to take them sometimes. They are very rare in this case because of the rules we have. Because if everything matches, then the direction is usually correct. Now let's talk about the positions that we shouldn't trade. This is very important because we can get fake signals, and here we have an example of a signal that was incorrect. Although we have a green, which would be a buy signal, the hammer candles are still in the bearish area and the candles are still red. We can see that there has been no movement for a long time until it turns green again. This means that we wouldn't have taken this position. Even where we were just now, the first green dot would have been the latest exit point. However, we exited earlier. That means we wouldn't have used this long position. You could have used it as an entry point to see that not all trades are profitable, but in this case, we would have exited no later than this point where the chart goes above it, resulting in a loss of 1.37%. So, don't rely on everything being profitable. Especially in such consolidations, now with the Hama candles, as long as we don't have confirmation from these candles and they are very close to the MA line, we don't need to trade. It doesn't make much sense. If you try to trade it, please don't be greedy. For example, if we say we're going to enter here, we see that we have taken 2.33% profit, we close our position or half of it every 1 to 1.5 or 2% during a consolidating phase and then set the stop loss of break even. Then you can trade these consolidating movements, but of course, it's riskier. That's it for now. How do we proceed? We use the OCC alert NRP's alerts, and we click on the 3 dots, then on add alert, and then we want to have something. We want an OCC long condition and always per bar close. Then every time a green dot appears, we get an alert, which means OCC long condition. You can write in what you want here, but you need to prove it before open trade. You do the same thing with the short condition, and then you know whether you're long or short. These are the things you need to consider. It's actually a very simple trading strategy. I wish everyone success. Pay attention to your risk management. Currently, with PEPE Coin, you can make incredible profits. Maybe we can even take the last trade again. As a small conclusion, the sell signal came here. We wouldn't have entered here, but we would have entered at this point because the candles were red. That means the optimal confirmation would have been here, around this candle, or maybe even earlier. Currently, with this trade, if I go back to the correct candles, we're up 3.58%. That's very good. I would definitely take profits now because taking profits is never wrong. Thank you for watching. See you in the next video. Bye-bye.